Series 5, Insurance. You have finally gotten your financial health in check, following the guidance and steps we have given you. Now we look at what happens if you lose your job. What happens if you're in a car accident or your house burns down? How can you protect your assets and also yourself from such unexpected and costly events? Most of us feel confident about our future and our ability to tackle unforeseen circumstances and understand insurance to be an unnecessary spend. Managing your risk requires insurance policies. So what is this insurance all about? Insurance refers to transferring the risk of a financial loss you might experience due to life's uncertainties to an insurance policy through a licensed insurer. Now, how does insurance work? There is a lot of different types of insurance policies that are available, and virtually any individual or business can find an insurance company willing to insure them for a price. The core components that make up most insurance policies are the deductible, policy limit, and premium. And we're going to look at these individually. Premium. A policy's premium is its price, typically expressed as a monthly cost. The premium is determined by the insurer based on you or your business's risk profile, which may include your credit worthiness. For example, if you own several expensive vehicles and have a history of reckless driving, you will likely pay more for an auto policy than someone with a single mid-range sedan and a perfect driving record. However, different insurers may charge different premiums for similar policies, so finding the price that works for you is very important, but it will require some legwork. Then we look at policy limit. The policy limit is the maximum amount an insurer will pay under a policy for a covered loss. Maximums may be set per period, for instance, annual or policy term, or per loss or injury, or over the life of the policy, also known as the lifetime maximum. Higher limits carry higher premiums. For a general life insurance policy, the maximum amount the insurer will pay is referred to as the face value, which is the amount paid to the beneficiary upon the death of the insured. Then we look at deductible. The deductible is a specific amount the policyholder must pay out of pocket before the insurer pays a claim. Deductibles serve as deterrents to large volumes of small and insignificant claims. Deductibles can apply per policy or per claim, depending on the insurer and the type of policy. Policies with very high deductibles are typically less expensive because the high out-of-pocket expense generally results in fewer small claims. There are different types of insurances, but for the series, we will cover liability, medical, and life insurances. Liability insurance. This type of insurance is a short-term one covering your assets such as a home, car, phones, furniture, or other important assets. This type of insurance covers you against theft, fire, or loss through monthly policy payments to insurers. The licensed insurer, in turn, financially compensates you if any of these events occur and are proven. Losing a valuable asset such as a TV can set one back, as you would have to dig into your emergency fund to purchase a new one. But if you have a policy, insurers will replace your asset on receipt of a claim. Another type of liability insurance is disability and loss of income covers. These cover you in the event that you are disabled and as a result, you cannot work or perform any work, and now you've incurred loss of income. It covers you for financial loss through retrenchments or death of a breadwinner. Medical insurance. Medical insurance allows one to receive the best medical treatment when they fall sick without having to be attended at public hospitals where large numbers of people are treated by a limited number of medical resources. It is, however, not a huge risk if one cannot afford to take a medical insurance, as the South African government provides for medical needs at public hospitals. It is an optional option for those wanting to ensure that they are treated at hospitals where resources are unlimited, such as private hospitals. The licensed insurance company settles all the expenses related to an illness for which you need medical treatment. And this covers hospitalization, daycare, post and pre-hospitalization. Then we've got life insurance. Life insurance covers one against death and disability. The insurance policy is paid over a lengthy period of time upon death, disability, or the loss of a breadwinner. The insurer will pay out a lump sum to the beneficiary of the selected insured person upon his or her death. Taking an insurance policy gives you peace of mind from any future financial risks. Do the right thing and research on the best insurer to suit your pocket and also your needs. No one must ever live a life without appropriate insurance cover. We hope that with the information that we have provided to you, you'll be able to improve your financial health, your financial well-being, as well as set yourself up for a rainy day.